Ladies and gentlemen, it's Adrian's Dunchuk, CNT Charter Market Technician. Welcome. We are back with the Trading Congress. The Trading Congress 2024 rolls on. This is day 4, and yet another incredible session because, well, all it all comes down to is basically that we still lack confidence as traders. Many people come to the space, they are new, they are seeking for beginner-friendly information, and all they get is a lot of spamming and chilling and kind of like, just bullshit kind of type of a content flying all over the internet, a lot of misinformation. From people that are self-proclaimed experts, right? And it's so easy to fall for all those scams and rug pulls. I've made all sorts of possible mistakes that you can imagine, basically. So I'm just trying to cause a little bit of a better information spreading, with the right people, with the right educators, with the right experts, with profitable traders, with people who have been in the space, who are veterans, with the professional money managers, with people who are actually behind all of those elite faces and profiles and those incredible track records. And one of them is actually our today's guest, and we're going to dive in to the depths of the profitable trading. We're going to talk to Koroush, AK, who's my dear friend, whom I truly admire for many, many years, a person behind arguably the most famous guides in trading that are bite-sized, that are beginner-friendly, that are so easy to understand that they rely on basically zero complexity or close to zero complexity, so that we make it all digestible. And we need this digestible information, right? And people need those digestible information. For everybody who's coming right for the first time to discover this incredible man of a legend, Koroush himself, you're in the right place. And the best time to educate yourself is literally right now. Koroush, welcome to the show, my man. How's it going?
Adrian, thank you for the very kind introduction, and thank you for throwing together this incredible event that all the new traders in the space can benefit from and get tons of value for free as well. So thanks.
I appreciate you, my man. And let's dive straight into it. I mean, profitable trading, like what it is, like how can we actually become profitable as traders over the years? And let's hear from someone who has got more than 7 years of experience in the space.
Yeah, I'd love to dive in. So quick introduction. I've been here over 7 years, and I can actually start saying 8 years now. Trading crypto was how I started. Eventually got involved in other areas of the space, investing. I ended up interviewing over 100 plus multi-millionaire traders, you yourself being one of them, and gathered a wealth of experience. Now my main 2 focuses are trading and teaching others to do the same. So yeah, let's dive in today. I was planning on presenting a roadmap to profitable trading, 5 levels to it that I've split out. And if someone's new in the space or new to trading, or they've been trading a while and struggling to make it profitable, you're probably somewhere on this roadmap and just need to move on to the next level.
Let's put it up then, shall we?
Okay, perfect. So when it comes to trading, normally I find if someone has a problem, issue, or is struggling, that somewhere along this roadmap, either between level 1 and level 5. And most people go wrong straight at level 1, not through fault of their own, but just through social media itself and what it ends up presenting. So if we come down here, what people normally see in trading, especially when we get a crazy bull market like this, something that I know you don't push at all, Adrian, but a lot of influencers in the space do, and that is becoming an overnight millionaire. When in reality, trading has failures, years of work, requires tons of discipline, dedication. What you see is some of these screenshots of people becoming millionaires overnight. They're fake. It takes 2 seconds to make a screenshot. A lot of the people who also become millionaires overnight, they'll lose it all eventually, and they're not going to post that on social media. They just ended up posting those big wins, and there's a lot of disappointment too, because trading doesn't always work out. There's a lot of hardship to it as well, and it's important that you're aware of this, because level 1 of the roadmap, the first step is trading for the right reasons. So if you decide to trade, if you try to trade to get rich quick, you're going to get poor fast. If you trade for what it is good at, which is freedom. So what do I mean by freedom, and why is trading good for freedom? It's not because it's particularly easy compared to a lot of other things. It's because You can do it from anywhere. You just need a laptop. You can be anywhere in the world and you get complete location freedom. It's got a high income ceiling. So if you get good at trading and you put the time in, you can scale that up really, really far. It's got a higher ceiling than a lot of other career paths that you can choose. It's a cool, unique way to get involved in crypto. And if you're bullish on this industry and you want to go hard and master trading crypto, that's a fantastic path to take. So if you want time freedom, if you want location freedom, you don't have to work a 9 to 5. You pick your own hours. Trading is fantastic, but it's not easy, and it's not something you do to get rich fast. So that's level 1 of the roadmap. So what happens next? We've decided to go forward for that. Well, where people go wrong is, again, they watch a couple YouTube videos and immediately they start trading. So there's a statistic you see all the time, which is that traders, 90% of traders lose money. And it's kind of true, but it's also kind of not true, because that 90% includes everyone who opens an exchange account, deposits some money, and tries to trade. That's not like, that doesn't determine the success rate of a profession. That's just people who tried to gamble and failed. So that also includes watching a couple YouTube videos. If this is a competitive skill, this is a skill that can make you money for a long time, you can't just watch a couple YouTube videos and expect to be profitable. You need to put the same amount of work in as you would any other profession. So you need to build a solid foundation to your trading. And a solid foundation to trading requires 3 pillars that I like to focus on. First, you need a really good understanding of risk and how it works, because regardless of what upside you get, if you don't understand risk thoroughly and the concepts behind it, you're not going to make money. Or however much you make, you'll lose. And Adrian, you've seen these stories. I know these stories. People going and making 250 mil plus in the space and then going to zero. So if you can go from 250 mil to zero, from billions to zero, you have to have risk management. It doesn't matter how much money you make. That's part 1 of your foundation. So put in the time. Thoroughly understand every area of risk management that you need to know for trading before diving in and making your exchange account starting to trade. Next, you need to understand journaling. Now, this is something some traders aren't as big a fan on as I am, but in my opinion, if you try to trade without journaling, you're almost certainly gambling, because you're just moving forward without understanding whether what you're doing is profitable or not. You don't know which parts of it work, which parts of it don't. And I'll give you an example. I had a trader who I was helping, mentoring them, and they had been trading for 4 years. And they had 6 different strategies that they were just randomly running. They had a journal, but it wasn't categorized or organized in any way, shape, or form. So he hadn't been profitable for a long time. But some months he was really good. Other months is just break even or negative, and the negative lasted so long he wasn't making money. We sat down and looked at his journal together. We categorized all of his 6 strategies. 2 of them were losing money, 3 of them were break even, and the remainders were the only one making money. All we had to do was get rid of everything that was useless, wasting time and not working, and he turns profitable. So don't move forward without journaling. It just doesn't make sense at all. And then the last thing you need is edge. So you have to have some way or some advantage in the market over other people. There's a lot of places you can find edge, but that can be as simple as using solid analysis in order to find edge. So this is where technical analysis comes in, and where I think it's misunderstood as well. A lot of people think technical analysis is some magic means of predicting what's going to happen next in the market. And there's slight elements of truth to that, but you don't just draw lines and the price reacts to it and you make money. You use technical analysis to consistently analyze the market in a certain way, and then you find edge within that consistent analysis. So the most important thing about your technical analysis is that it's consistent. And then from that, you can make it more sophisticated as long as you maintain the consistency, but that's where you find edge, where you analyze the trades you take. You find patterns in market conditions, in price formation before it hits your key levels, in the specific levels you use, and everything else you want to. And that's where your edge comes from. So now we got level 2 sorted. So if you guys make it this far, we now get to move to level 3. So this is where you separate people who never see consistent results. Sometimes they make money, sometimes they lose money, but they have no ways of predicting it, to people who actually see consistent month-on-month results. And to do that, You need to build a trading system. So what are the components of a trading system? You need two things. You need clear, repeatable rules, and you need a clear, repeatable routine. James Clear quote, which it's said a lot, but that's purely because of how good it is. You don't rise to the level of your goals, you fall to the level of your systems. So if you guys want to be profitable traders, if you want to make money consistently, then you need to set yourself the habits of a consistent trader and then stick to those every single day. So checklists need to be in place. You need to have consistent analysis. You need to have rules set up for your system. This edge in your journaling, the whole point of this is in order to build a set of rules that will consistently make you money. And then where the routine comes in is it's not just technical consistency around strategy, because I actually don't find it very difficult to teach someone a profitable strategy. I don't think that's the hardest bit. Now, to get very profitable, that's difficult, but to get a somewhat consistent and profitable strategy, it's not that difficult. You just put up you make a set of rules, keep it as simple as possible, take 30 trades, iterate, take 30 trades, iterate, and eventually you'll find something that's EV plus. For those of you who don't know, EV plus means positive expected value, which means on average, every trade makes money. That isn't the hard bit. The hard bit is psychologically not messing up. That means when the FOMO kicks in, when the greed kicks in, you don't mess up your strategy. You don't deviate. You don't have one sleepless night that makes you make a big mistake. You don't end up not eating, getting hungry, and making mistakes based on that. This part of the routine, removing behavioral inefficiencies, is so overlooked and so important. One commonality I had between the many traders I've interviewed is that some of the most advanced ones that are 15, 20 years into their journey, they're no longer like trying to squeeze out an extra 1 to 2% here on their strategy. Like I asked one of them, 14 years experience, multimillionaire, really profitable. What's your main focus? How do you for your trading right now? How are you trying to improve? And he was like, I'm trying to stick to my diet and sleep well. I'm just like, because adding 1 to 2% is not as beneficial as removing those 10%, 20%, even greater drops from emotional slip-ups and behavioral inefficiencies. So routine essential, rules essential. And that's level 3. At this point, you can be profitable and consistent as a trader and be getting good results as long as you get to level 3. But you can go even further beyond this as well to level 4. So once you've built this, one mistake I see people make time and time again is they do that with $100,000 or whatever the equivalent is for them. They put the entire amount of money in straight away. And I promise you, if you are new, you are going to make a mistake, an expensive mistake. And you don't know what that mistake is going to be when you start out. That might be getting rugged on a coin because you didn't realize you shouldn't be trading something super low market cap the same way you trade something super high market cap. It could be because you fat finger something on an exchange because you don't have enough experience playing around with the orders to not make that mistake. It could be because you have some sort of security error, get hacked. Whatever the mistake is, it's going to happen at some point, behavioral, technical, whatever it is. So why don't you just take your time? What's the rush? Slowly scale up. Start with $1,000, start with $100, start with 10,000, whatever that small amount of money is to you as a trader. Start there and then scale slowly. Like this, your goal is not to get rich overnight. If it is, I'm the wrong person to follow. That's not what I teach. That's not what I preach. But your goal is to get freedom from trading, to make money consistently for years and to win at this game long term. Start slow. There's no rush. There's always going to be another opportunity. Adrian, you've been here with me since 2017. Every bull market's been amazing. Every single bull market has been amazing and filled with opportunities, and there's going to be more. Even if it's not crypto, there'll be another asset that your trading skills can transfer over to. There's no rush. Take your time, scale slowly. So I also don't like paper trading. This is a quick tangent here. I don't think paper trading is very effective because, like I said, behavioral consistency is one of the most important things, and you don't learn that from paper trading. Even trading with $100, which you'll be losing $5, $10 on a trade. It's like tiny amounts, but that's going to teach you still because your ego gets attached to it. You care if you win or lose because there is some money on the line. But when it's paper trading, you just don't behave the same way you normally do. So you teach yourself bad habits. So I like to start on a set portfolio size and then slowly scale up after I get a minimum of 30 trades in. Start at $1,000, 30 trades, looking good, profitable, routine stuck to, psychology good. Let's go up to 10,000. Okay, let's give it a try. 30 trades good. Let's go up to 20,000. Oh, wait, I'm messing up here. I'm getting scared in these positions now. Okay, I need to learn to deal with this a bit. What can I do? Why am I getting scared? Okay, well, I didn't sleep really well. I got less than 6 hours of sleep this night and I underperformed. Okay, I need to up the consistency there, work on that. Whatever the reason is, you've got to get to the root cause, deal with the issues, and then continue scaling over time. And those are just the psychological issues. There's going to be technical issues as well. If you're trading with $50,000, you'll be able to trade most coins with not that much issue. Once you get to $150,000, liquidity issues are going to start to come into place, especially in a bear market. In a bull market, it's a lot easier to trade. But again, things you need to experience, things you need to learn. And that is level 4. So last level on this roadmap is level 5. And again, if you've got into level 4, you're crushing it. You're probably very profitable, making money consistently. But once you get to year 4, year 5, you're going to struggle a little bit, especially because of just the nature of how trading works. If you trade the same system forever and expect that to work, it's not going to, because edge decays over time in the market. So you need to be able to adapt, and you need to understand how to adapt. To give a quick example of how edge decays, this one's a little long, so I won't take too long on it. But imagine you got a market here where you buy apples. So you buy apples from someone, and then you sell them for $15. So you make $5 here. Then eventually, Steve notices you're making money. And we hate Steve, by the way. Steve's the absolute worst. Steve comes in and starts buying apples for $12 and then selling apples for, let's say, change that to $14. So now Steve is, all the people who are selling you apples are selling to Steve instead. All the people that were buying apples from you are buying from Steve instead. So your profit margins sort of disappeared there. So now you have to start matching Steve. And because you have to start matching Steve, you're making less money. And this continues because Steve is the worst. So now he starts buying for $13 and selling for $14. So your $2 profit has gone down to $1. And this is how trading works. Wherever you're buying and selling and making money, eventually competition is going to come in, notice, and start taking more and more of what's making you money. So what you need to do is expand. You need to find multiple different ways of making money and also iterating your same strategy. So with apples, you've got to start buying from a whole bunch of different suppliers all over the world. You've got to get more sophisticated, or you've got to swap to oranges. Maybe you start selling bananas, whatever it is for you, and it works exactly the same in the market. So to get to level 5, you need to get into the habit of consistently, every single month, reviewing all your data, all your trades, and improving, iterating. What doesn't work anymore? What's working better than I need to double down on? What new ideas do I have to get more from the market, to make more money in the market? And yeah, that's how you get to level 5. And this lasts forever. It never stops. You keep improving. You keep finding new ways, new places to find alpha. And that's my 5-level roadmap, hopefully beneficial to the audience.
I love how mathematized you actually put it in terms of inferential kind of like analysis, right? You just make a proper inferences, and one comes from another, and how you just just go and follow the process, right? For many people actually who are watching and viewing that right now, and for whatever reason, luckily seeing. Well, hopefully not seeing Koroush for the first time. However, if you've just bumped it, what Koroush is presented right now, I think that it's so much underrated in terms of not only the behavioral consistencies is something that Koroush actually highlighted, also because the simplicity, right? I mean, in the trading systems, on one hand, of course, edge comes from the fact of the discipline and just proper application of the systems, which is what most of the people actually fall victims of not following that. Right. On the other hand, the systems are best if they're simple. If there's too much complexity, you're using 20 different moving averages, you're gonna get so many different iterations of signals that are kind of like losing edge because of the complexity, right? So you always strive for getting the systems to be as simple as possible. even though they may rely on a couple of different factors, right? If you keep on adding those factors, keep on adding those different filters, those different parameters optimization from different technical tools and the moving averages and the RSIs and the MACDs, and just add the complexity, and more layers stacked up, then the systems actually become, unfollowable. You cannot really follow them, right? Because the system frequency is going to be giving you a signal one time per year, when all of those different factors and components basically coincide to give you a signal at one point. So at the same time, on trying to follow the process, we have to strive for the simplicity, which is something that by watching Koroush right now, the master at work is like watching Picasso paint, basically, literally, quite well here. And what I'm thinking is, me having the CMT kind of like a charter and the journey, which is something that I truly appreciate, and I cannot recommend it enough now for everybody to take a look into it. There's been overall tendency, of not necessarily striving away from the technicals of the market, but more like making a fusion out of the fundamental analysis and technical analysis, right? So technically, number-wise, there's not a single reason why, for instance, technical analysis would be better than fundamental analysis. It's just a different set of toolkits, right? We just quantify the risks and the profitability of strategies based on, for instance, the price to action, volume, momentum, and so on, against, for instance, those external factors, those macro financial factors, such as the CPI, such as unemployment data, and so on, which truthfully are the same types of numbers, right? The numbers do not differ; they just different categories. So there is this decent change and improvement, I think, for making this conglomerate of technicals and the fundamentals. And the question goes to you, Koroush, like, how often do you rely on any fundamental information in your building your systems?
Fantastic question, Adrian, and really liked your points on complexity when it comes to technicals. And also, I think that's actually linked to your fusion of fundamentals question there. So if we take Steve again, even though we don't like him, and the Apple example, if I can make money buying apples for $10 and selling them for $15, I'm not going to do anything else. I'm not going to buy them for $10, dice them up, make them all pretty, package them, and then sell them for that same $15 if it doesn't bring me any advantage. And that dicing, packaging is the complexity. So when you layer on complexity, it should be with the deliberate intent of making more money. It should have some tangible benefit for you. So where does fundamentals come in there? Well, if I've got a base system that's making me money, that's really simple, and now I want to take it to the next level. I want to find those times where I can risk a bit more, those times where I can extend my profit targets or go harder on those trades. That's when I add a form of complexity. Now, that could be anything. That could be another indicator. That could be fundamentals. That could be anything I want to, that I have some sort of edge in, add in. Of course, I'll test it. And that's what the same thing I do with fundamentals. So an example of how I'd use fundamentals would be, would you consider narratives fundamentals, Adrian?
Oh, shit. Man, I think we're going too deep. Let's
just say yes.
Let's say yes. Let's say yes.
So let's say we're comparing different tokens because they have some sort of linked fundamental basis. Now, that could be a silly one like memes. That could be they're both exchange tokens. Now, I know that when Bitcoin breaks out, and then after that breakout, Bitcoin starts to consolidate, that normally other coins are going to follow aggressively afterwards. I also know that if there's a particular outlier performer in those, say a meme coin, recently we had Peanut going crazy right as Bitcoin was consolidating after a pump. That makes me think, okay, because of that, other meme coins are likely going to do well. So if my system presents for me a fantastic setup, and it did on Pepe, I'm going to go extra hard. I'm going to extend my profit targets. I'm going to increase the risk I take on that trade as well. That's an example of where fundamentals or a form of extra complexity fuses to make me more money, and that's when I want it. So I'm not against complexity, but it needs to make me more money. Otherwise, it's got no place there.
Which actually takes me to the next point, right? Because in the world of complexity, in the world of fractals, where the nature is really self-complex to an extent that it's infinitely complex, right? And those patterns, those hours consist of minutes, minutes consist of seconds, seconds consist of microseconds, and so on, nanoseconds. And we go dive deeper, and each and every single aspect of that is basically limited by the software that we use for trading, right? I mean, if you have very extra accurate software. This is going to print out information on a maybe microsecond basis, for instance, right? So it's gaining the edge of course. The lower the time frames, we pick, the more of the reaction actually time, the less of a reaction time we should have. However, outside of scalping and leaving the strategies as in the buy and hold, the position trading, swing trading aside, there are a
Yeah.
couple of methodologies that we can follow, such as the trend following, such as the mean reversion, right, or relying on the
Mhm.
chart pattern recognition, or relying on the, like I said, external factors such as the CPI data and so on.
Mhm.
Which one is your favorite and why?
So my absolute favorite form of trading by far is trend following or momentum trading. Same words, same for same thing, different words for same thing. And the reason this performs really well for me is I started off as a mean reversion trader. So for people following that don't know what these words mean reversion is pretty much you sell at resistance, you buy at support, and you generally play ranges, or within an uptrend, you play up and down in the direction, expecting the price to revert back to the mean consistently. So you can play a channel up, sideways, whatever. Now, momentum trading, I discovered afterwards because I really kept missing out, especially in crypto, on a lot of big moves, and I felt limited in my mean reversion. Now, that could be a skill issue because I know mean reversion traders who crush it, but when I swapped to momentum, that discretionary edge, that extra complexity that came in was always so profitable, because when you can spot the right momentum play in crypto, it makes so much more money. So it is my favorite play because I'm a crypto specialist and because I understand it best. When I hypothesize about the psychology on the charts, which I think is very important for forming ideas on where to find edge, it does best for me. It's the one that comes most naturally for me. And I think it's the one students or new traders do best with as well.
I got you. And, funnily enough, I'm a trend follower myself, right? I mean, whenever someone asks me what I do for a living, I say, instead of saying I'm a trend follower, I always say that I'm a professional loser, right? Because the trend following basically means, well, choosing to be wrong often for the sake of high profits, right? And those big wins and those massive outliers, instead of choosing to be right all the time, right? And actually,
Mhm.
there's this incredible book that I often bring it on, on the title wise, that is called "Being Right or Making Money" by Ned Davis. And they did NDR, and Ned Davis is an actual proponent, I think, in a big profession. Of course, he's like his late stage of his life, although he's built an incredible empire on an investment research firm, and they just create a lot
Mhm.
of indices and indicators, including a lot of components, both from the technical side, such as the momentum, such as, for instance, the POC, like the pace of change and so on, uh, and factoring in all those different types of macro financial data. So that's already type of efficient analysis. Although this title basically saying being right or making money is an actual choice that we have to make as a trader, right? Whether
Mhm.
we want to boost our egos, if that's all right, some people go for that, right? And they are just feeling more comfortable with not taking too much risk, and they are feeling more comfortable in uh, just being right more than winning money. They are in the game to boosting their own ego, because they might feel underappreciated, understimulated, whatever that is. Their job is actually choosing to be right more than making money. In my case, being a trend follower means that you're going to be right only several times, out of 10. It's going to be anywhere between 2 and 3 times out of 10, for instance, right? It's possible for those highly aggressive trend following strategies, for everybody who's watching and viewing that right now, for the systems to have a win rate of anywhere between 15 and 30%, and still
Mhm.
compensating from one big win all those tiny minor losses, kind of compelled on the way. And so that's the true virtue of trading, right? It's actually deciding whether you want to have profitability and you want to go for higher profits in exchange for making
Mhm.
more mistakes and just rejecting those smaller trades in between, or you want to be capturing inside of the trading range where the market reverses 70% of the time, just travels within the channel. And that's kind of like going for the limited profitability, especially on a smaller scale. All right, versus actually those big hunts and those big wins. And speaking of the risk management, right, which is crucial. For instance, I use the ATR filters. I use the volatility filters on a trade basis
Mhm.
and also on the portfolio management phases, right? So the simple rule of thumb what it means in simple layman terms is that if an asset is more volatile, if it changes more, it makes sense rationally to put less stake in it versus
Mhm.
when it actually just oscillates less, right? Because the risk is limited on that front. So what does it look like from your end in terms of building, designing those strategies and systems, how you approach the risk management?
So is the question how I approach risk management or what I look for those type of breakout momentum trades?
One includes another, if you will.
Okay, yeah, okay. So how do I manage risk on trades? I have a risk limit on every single trade. So it's 1 to at most 3%. Now, there are very, very rare setups, which I call my AAA setups, which I will take up to 5% risk on. But that is a very rare instance. And for 99% of cases, I don't think you should be risking more than that per trade if you want to make money for many years over hundreds of trades. So when it comes to risk management, that's the approach. How do I set my stop loss? Well, that's a question that's I feel not useful to answer for people because my stop loss is only useful for you if you have my exact same entry rules, my exact same position sizing, my exact same profit target. So I'd say when it comes to stop losses, have a consistent means of invalidating your idea. And then this is what I say all the time: test it for 30 trades. If it's good, fantastic, don't change a thing. If you need to improve it or you find ways of improving it, if you find that price never even comes halfway down, okay, cool, half the stop loss, or move it 75% of the way for where it was before and adjust it like that and make incremental improvements like that. Then when it comes to what I like to see in trades, it's not very complicated. It's firstly, my top filter is what are the market conditions. So before I even look for a trade setup, I like to look at the overall market conditions, which are determined by the high time frame structure on the charts, which are determined by the overall sentiment and narrative on social media is what I like to use. I've been using X for 8 years, and it gives me a very good, unique insight. Also, different macro news events and stuff. My team give me updates on that for their views, and they have very good views. So I rely on people much more skilled than me on that. And so that's the step one. What are the macro conditions? Because if the conditions are great for my strategy, then I'm going to take a lot of trades, even some okay trades, which normally aren't my best trades, I'll be taking. If the conditions are bad, I'll be trading a lot less. If the conditions are really bad, I'm going to be hyper selective and my focus is not losing money. Okay, so that's conditions out the way. What's next? Now I want to see, firstly, set key levels. That's very consistent. For me, I like to set key structural levels, which are just based on higher highs, lower lows, high lows, those levels. And then from those, I like to see how is price approaching those levels. The price action before the price hits the level is actually the most important thing for me. Not like anything else besides how does price approach this level. So what I'd like to see on a good momentum trade is a steady move into that level without too much fluctuation, not too dissimilar to what you were describing. What I hate to see is big random spikes out of nowhere after a long period of going sideways. I also like to see gradual, progressive, increasing volume into those levels. So that's some alpha things, starting points. If you want to build a momentum strategy, look for those things.
Yeah, I think one way to kind of like translate it as well and just put it in for everybody who's just joining the space literally right now, uh, which is actually not a bad time at all. What we always say is that the best time is now. The best time to start learning is now, basically, right? There's no better
Mm.
time to start learning than yesterday or than today, basically, right? Any time later beats out, that starting to learn tomorrow, for instance. Uh, the concept of the momentum investing, just to bring a little bit of history, right? 2000, well, not 2000, right? 2024 right now, but back 215 or 16 years ago, actually the first documented uh, cases quantified as in scientific more type of case studies were documented basically on using and applying the momentum investing, as in that's the
Mm-hmm.
simple principle that if something works, and it's not broken, just keep on using it, basically, right? In the name of that, if there are outperforming assets, they're more likely to continue to outperform, that they're more likely to revert, that just change and shift the direction all of a sudden, right? So the concept of the momentum investing for everybody is to basically that the outperforming assets will more likely continue to outperform and the underperforming assets will more likely continue to underperform, which is 180 degree opposite to the value investing, as in when you try to capture valued stakes, for instance, because of low price to earnings. But the problem is, especially with very vibrant and dynamic kind of like industries with high volatility stakes, just like crypto is, that in the meantime of waiting for a coin or for a token or for asset or for a stock, to move up, you may actually miss out a whole 10x or 100x rally on between, right?
Mm-hmm.
And which later on can be diversified, can be distributed, onto other trades and so on. So the momentum basically principle puts the stake on the profitability, right? That's where the focus is. And as we get closer towards the wrap with Koroush right now, which I cannot recommend for everybody to go and actually press the follow button on Koroush's profile on the X, on basically each and every single place you're going to find him on the internet. Just hit a follow button 20 times. Please do it. Please do it for yourselves, for the sake of everybody who you're dealing with. Tell your friends, your family. Go ahead. That's the best follow of the year, in my private opinion. And for so much of the simplicity that you bring in, to the space, I truly appreciate it. Myself as a trader, as an educator as well, as a community member of yours, right? I'm a big loyal fan to what Koroush is doing right here. One final question before we wrap, though. Speaking of the discipline, and it's kind of like more of a meta type of a thing, right? As in, how do you stay disciplined in terms of the mental side? What do you do before we end on the mental side?
Thanks again for the kind words, Adrian. Really humbling, and I speak very highly of you. I've been a Burbs Nest member for a long, long time now as well. So as a community member of yours, thank you for all the kind words. I think you are the oldest running group in the space. You've been here for a while, and Lindy effect, there's a reason you've been around this long. So when it comes to discipline and sticking to things and consistently doing them, there was this book by Anthony DeMello, and it had this one section in it that really resonated with me and made me view discipline completely differently for the rest of my life. And I'm not going to give the usual, atomic habits and everything like that, because most people know that already. But what it was he said, quitting smoking or quitting anything is one of the worst things you can do, because once you quit it, you are tying yourself to it forever. And what this taught me is that to be disciplined and stick to something, I can't just choose to be disciplined, because if I do that and I force myself to do it, I'm tied to it forever. If I quit something, I'm tied to it because now I am that person that's quit this, but I kind of want it, but I've quit it because I quit. The better thing to do, and to take smoking as an example, is truly understand it. Like, truly understand it. When you smoke that cigarette and it feels good for that period of time that it feels good, it gives you that rush, that nicotine buzz, what are the effects happening afterwards? And if that moment you are aware enough and understand enough the effects it has afterwards, you're not quitting it, you're not applying discipline, you just don't want to do it. And it's the same thing. If you want to be disciplined with your trading, you need to believe the things that you want to be disciplined about. If you want to be disciplined about your risk management, you need to really understand it. Go understand the mathematics behind risking more than 5% per trade and trading for 10 years. Understand the probability of succeeding using reckless habits. And you don't need discipline to stick to your risk management. You want to stick to your risk management. So for discipline, my biggest thing is truly understand the things you want to be disciplined about. And then you just don't need any willpower. You just do it because that's what you want to do.
So the bottom line is, I should go and have a smoke, basically, then, if I don't.
Precisely.
I mean, what an incredible journey it's been for the past 40 minutes, actually. And I truly appreciate your wealth of wisdom and time spent. Of course, I know you're a very busy man. So I cannot recommend enough for everybody, like I said, to go ahead and check all the guidelines that Koroush is posting, check all the content. Each and every single post is 110% filled with value. I cannot recommend it enough. And I appreciate your time, Koroush. Like I said, I'm a big fan. And just keep on doing the incredible work that you've been doing for the past 7 years. Keep on doing this forever, for inspiration of many, many generations of traders to come. And thank you for your time.
Adrian, thanks so much. It's been an absolute pleasure, and I'm sure I'll be seeing you again soon.
Thank you so much. And before we go, actually, everybody, please, there's going to be a highlight of the QR code for everybody to scan, and for all the shout outs that we can give right now to our incredible partners and sponsors at DYDX, Bybit, Cointel, and Dragonsland. Highly recommended you have for you to go and have and check on them as well. we are actually having a proper giveaway with the QR code right now. You not only claim the free VIP access to all the membership corners, each and every single aspect of the Bourbonist is wide open to you. Take as much knowledge as you will. And we actually distribute and give away 3 memberships, VIP memberships to the community for afterwards every single day. So all you have to do is scan the QR code. And otherwise, I truly appreciate your time, your viewership. I've been your host, Adios Lucic, CMT Charter Market Ignition, Crypto Burp. That's done. Thank you. God bless you. I'll see you around. Bye-bye.